Hi, this is Shane with the Rational Trader. It is the 24th on March. And just a quick video today. We're running in the midst of an experiment where we're trying to reduce the number of trades while keeping some level of profitability. We'll sacrifice some profit if it means we can get the number of trades down. And that's aimed at, if you want to trade multiple markets, we need to see fewer trades that are of higher quality is kind of what we're after here. And we're willing to be patient and wait. If we've got multiple markets going, then if you're only taking a handful of trades a week in a market, it's okay because you're doing other markets. And so I've been working on that, and I did not see what I was expecting at all in the CL and GC markets where I had set up something specifically for that. It took way more trades than I was expecting. Not just a small number, but completely the opposite of what I was expecting. So what I've done here is I made changes to the models, and with the intention of, so previously the changes we were making was looking at the analytical, analyzing the output, and then getting choosier with the behaviors that we would look for. What I've done here is actually gone deeper into the machine learning system itself and changed the modeling parameters so that we are looking for the cases where the market makes a bigger move. Okay, so there's fewer of those, and ultimately the question will be, is that signal clear enough in order for us to see it? All right, so ultimately this is about separating signal from noise. So I've done that, and I've run the analysis, and I like what I see in terms of trade quantity versus profit. And then what I did is I looked at the trade management. Because if you think it through, if you're going to take fewer trades, then each of those trades you want to give the market more opportunity to work for you. What we sort of migrated to over the last several months was taking more trades, but being very aggressive with the trailing. So it's almost like a scalping approach to the market, and that's really it's interesting that it evolved that way, because that's really the antithesis of sort of how I've always viewed trading the markets. So it's interesting that we're sort of coming full circle here, where working to get the machine to take fewer trades and then use trade management that gives the market more room to work for you. And so this is this is gold here, and there's 1, 2, 3. There should be 4 each side. Yeah, there's a fourth one down there, where I took the output and then ran various trade management approaches. And so up here on the left is if I just this one here. If I just trail it by 20 and move the stop at 10 to +1, and then just leave it there and just trail by 20, with the target of, actually it turns out the target is anywhere between 40 and 80 is about the same total result. So that becomes trader's choice. And we're looking at this number here, which is the efficiency ratio, or the trade quality, or overall system quality. And this here, trades per day. Okay, these two are the two key values. And so what you see is that as we start tightening up the trade parameter, the trailing, that's what the next one is. Move the stop at 15, move to +5. This one here is move the stop at 10 to +5. And then down here is kind of what we've been doing. Move the stop to +5 at 10, and then +10 at +15. You can see that the overall system quality is dropping fairly dramatically while the trades are increasing. We don't want to see that. The one on the right is the same, except that we're trailing by 15. And so here, already you're in trouble compared to the 20. All right, so this makes sense to me logically. I would expect I'm taking fewer trades. I need to give those trades room to work. If I trade too tightly, then I'm going to end up taking myself out. So what ends up happening is the reason that I lost my cursor here. The reason that this number is smaller is because the system is making less. Now you can't use this profit number as anything other than just a relative value to compare these two things, and you end up taking more trades as well because you're taking yourself out more often. Okay, it's not too many. It's not too many more. All right, so just for to get an understanding for how many is that, it's one trade per day, right, is what that works out to. So this is across five trading weeks, so 25 trading days, 26 trades, 1 trade per day. All right, so now let's see how well this analysis actually plays out into the future. I did the same thing for oil and the same thing for the NQ. So for oil and gold, let's look at gold since we had that up. The trade management now looks like this. So this is especially for members now. Open trade window for chart. So trailing by 20, and then moving the stop at plus 10 to plus 1, and plus 15 to plus 1. Okay, so just basically once you get to 10, move it to plus 1. And then let the trail take over. Okay, so much more in line with what I used to do when I was trading, manually. Now, I mentioned this is more for members. That's actually not the case because the members don't have these models yet. This is all experimental at this point. So members should still be using the production codes that have been published, and then we're gonna finish off this experiment and then decide if this yields positive results, then we'll take a look at that. And otherwise we'll end up switching back to the experiment we ran in December, which yielded the best results. So we'll start looking at those two. Okay, so that's it for this video. Just a scheduling thing. We've got we'll be trading next week, but the week after that the room will be closed. I'll be on vacation, and then we'll come back after that and sort of choose which path we're going to go down. Okay, take care.